Okay, so let me just share some workings that I have. Where is this share screen? All right, so for the income statement, as I said, you had some adjustments. Seems as though y'all did the adjustment well. Y'all picked up the closing stock, the drawings, y'all took that out of the purchases included 300,000 taken out by the owner. Dealt with that. You have to remove that from the purchases and treat it as drawings. Your depreciation was 10% on 1.4 million. You had prepaid rent that you had to back out. Okay, those were the key things. Your cost of sales would have been your opening stock, add your purchase, less your drawings, then add your carriage inwards, less your closing stock. Again, it don't matter the order, as long as y'all get the right profit, and that's all I'm concerned about. So sales, less cost of sales, giving you gross profit, and then you dealt with all the needed expenses. The rent would have been adjusted because it was prepaid, included depreciation. Then you get your net profit of $1.1 million, 1160. So as I said, you would have some differences, but let's look on some of the things we may end up having in our balance sheet. So we had our land and building, right? That was straight, no depreciation. The furniture and equipment, you would have had to back out 490 because you had some depreciation from before. It was 350 plus the current year of 140.
Yes, sir.
Yeah. So that would give us 910 for that. So the 3.2 and the 910 giving you a non-current assets being 4110.
Yeah.
Cool? All right. So we're good with that part. Even if we didn't do it yet, we want us to follow the flow. So the land and building 3.2, furniture and equipment 910. Why? 1.4 is the cost. There was 350 accumulated depreciation already. You put 140 more, which put you at 490. So that's what carried to the 910. 910 plus 3.2 give you 4110. That's the non-current assets. For the current assets, now you have your closing stock. That's what's supposed to be there, the 960. Your trade receivable 1.1. Your prepaid rent 105,000. Your bank balance 620 and your cash 85.
Total of 2.87.
Correct. Now, then your equity and your liabilities. Your opening capital, add your net profit for the year. Let's say that's for the equity. Less the drawings, both the cash drawings and the inventory being 550. So your closing equity or closing capital is supposed to be 4610. Okay?
Hold on, sir. Sir,
Yes.
I think I missed something there. So you say opening capital 4 million, net profit
Yes.
1.160.
Yes.
And then you list the drawings of how much?
550.
You're gonna have
Remember,
the
300,000 was
250, and then you're gonna
inventory and
increase it by the
150 cash.
300 that you took out of the purchase.
Oh, I didn't think there.
250, sorry. Yeah. So 250 cash and 300 inventory.
There should be 550.
It should be 550. It's only one line y'all shouldn't have yet in it because we don't know the GCT, that's the part
Is the
C, right?
GCT. Yeah.
Right. The trade payables 980. The only thing now is the GCT payable, right?
Yeah.
That is the one that would be the balancing figure, but that's something you're gonna work out. So now we know that it's supposed to be that figure. I want y'all to do part C for me now. So now y'all are trying to do the part A, but do part C now. I want y'all to work out the GCT. So live and direct, you have some information. Yes?
Okay.
Read the notes. And now give me that, yes, the hand that is up, Samsung. Please use your name so I can know that which student it is. Yes, so Samsung, go ahead.
I'm sorry, can you go back to the cost of goods calculation? Yeah, the cost of sales calculation, please.
All right, hold on. Cost of sales. Here's the cost of sales calculation. Go again, what was that? I'm sorry, I didn't. Is that somebody unmuted and speaking to somebody else? I heard something.
All right, thank you.
Okay, you're welcome. Okay, all right. So as I said, for the balance sheet, we should have everything going down, should be all right. The only one line would be the GCT. Now go ahead and do the GCT calculations. Proceed, do part C. Using the information, proceed with part C. So a few minutes, not too long, few minutes. Just read the question carefully. Give you probably another 2 more minutes and then we will see where you're at.
Sir, quick question for the purchases. Should we deduct the amount the owner took before the GCT amount?
Yes, yes.
Okay.
Yeah.
All right, just that information.
Yeah, man. How much again? As it the tax? As it tax payable? Going for how much? 100 and some thousand? Okay. Anybody else finished?
Sir,
Yeah?
I got 370,326 payable.
Why is my machine hanging like this? Okay.
I got 465.
But
Mhm.
there's already it's a GCT control account shows 95 credit already, so
Mhm.
wouldn't that be deducted from the 465?
Hmm.
Yes, sir?
I'm waiting on some other people to finish. I'm not responding yet. I'm not responding yet. So I see them looking at me. I'm looking for the answer, but I'm trying not to respond. So I'm giving you all 1 more minute, and then all of it will be revealed.
Okay.
All right. So returning to my screen, these people are saying that that is the amount to balance it out. So let's see if these are the workings you all did. The sales tax that you all got was 1,141,304. All right. The purchases, the input GCT you all had was 795,000. Yeah, man,
Yes, sir.
15% on the
795,
5.3.
yes.
Look at the
Yeah.
screen enough, follow my screen, right? And then
Yeah.
the other expense GCT, electricity on 27.3, that's a
And
52,000.
motor
So
vehicle.
the
Can you
total
go back up,
input,
please?
go again?
Can you go back up the output GCT?
No, it's right there. It's still on the screen. The output GCT is still on. So the output, remember they said the 8,750,000 included the GCT in it already. And that's why I had it read for part A. So technically, when you are saying your sales, the sales that you declare in your income statement is sales before GCT. Correct. And this is why I had it read. Please ignore note number
Sir,
5.
that calculation for the thing there look incorrect. The
No,
sales, the output.
it's because the sales would be 115% because you have 100% is the sales and then the 15% of the GCT.
No, that's what, yeah, that's what I'm explaining. So I know
150%.
y'all asking the question during the explanation, but what I'm explaining here is that the sales figure of 8,750, and this is correct that the explanation the person gave, is that the sales figure already has GCT in it. So it is more than what? So it's more than the 100, as she said. It is 115%.
Okay.
So we need to back out 15% out of the 150 to know what the GCT is on the sales. Okay? So the actual sales was actually $7.something million. That was the actual sales. So on your GCT returns, your actual sales that you would have declared would have been what? 7,608,000. Is so? 696, something like that.
95, 696 round up.
Right? Something like that, right? So that would have been the actual sales. The GCT on the sales would have been 15% of that 7.6, which give you about the 1,141,304. Okay? All right. So that's on the sales. The purchases, though, did not include, yes. That have it? Yeah, man, note 5 said it. Note 5 said it. Man, I didn't read my
No,
notes, you
sir,
know.
note 5 did not say that. It says are subject to GCT. It didn't say that it included GCT.
It say all sales and purchases are subject
Yeah,
to
man, look at the top.
GCT
Yeah, look at
unless
the part.
stated otherwise.
I remember say blue wave charge and tax.
It said subject to, you mean that GCT wasn't added to it already?
Okay, so the reason why I put the ignore because you see, that's the thing, and I need to add more details to your thing. So the reason why I told you
Yes.
ignore GCT because I wanted to say that the sales, based on the wording, have you noticed everything else, the GCT is specific, right? So the 300 excluding GCT, the GCT on electricity, the motor vehicle, etc. Okay, so barring
So-
that, so now I see where we have gone wrong again with the
Yes,
explanation.
sir.
Wrong again with it. So it need to be far more clearer, right? So, all right, your GCT 15% on the 8.7. Yes, you still would get your mark, so that's lovely. If somebody is, when you say the net sales, no, it would be the 8750, you know. When you say net sales, what do you mean net sales? Explain. No, you don't back it out as salesman. So your revenue, no, it would be straight on the revenue. Because the carriage in is not, no. Hmm? No. Different. Return inwards is return inwards. Carriage inwards is like delivery. It's just, yeah. Carriage inwards is delivery fee. Yes. Yes. It's delivery fee, yes. Yeah. It's return inwards. Return outwards is actually what you're returning the goods. Yes. So carriage inwards is delivery fee that you pay. Carriage outward is a delivery that you don't charge the customer. Yeah. No, some people still use it in their trial balance, but most of the time, no, delivery expense, right? So, okay. So as long as we get in the principle. So some of you, yes. So I agree. The question was not clear enough for me to say you are wrong by doing the straight 15%. Wasn't clear enough. So if you did the 15% straight on 8750, that's fine. And if you assume that yes, it was in it and back it out, that's also okay. That was the intention when I put the whole thing in red. Ignore those notes because I didn't want you to back it out and work the revenue, right? That's the reason why I put that whole red there. But I didn't realize my wording wasn't adequate. Okay? All right, so that's fine.
So the total input GCT then, sir, would be 847,174.
Yeah, man, the input GCT is the same. That don't change. So the input GCT, everybody should have the same input GCT.
It's just the net that will differ a bit.
Is the output that would differ. That is correct. Okay? So the output would differ. Now, so we have our output less our input getting what is payable. But we all still would have a payable. Cool? We'd still end up with a payable because all of our output tax would exceed the input tax.
But
So
sir, based on the payable, wouldn't we deduct the 95,000 that is already in GCT control account?
No, but the 95 is a payable.
It's on the credit side, it's a liability.
Yeah, man, it's a payable. I remember this amount that you have your O is also a payable, so it's a liability. So it actually increased the liability. So you had a liability there, and you have a further liability, so it would increase the liability. You get that?
Yeah.
Okay, so that means my balance sheet would be, a lot of your balance sheet would be off because of my interpretations. So pardon, yes. In real life, if it is so, you know, some people when they do their system, so like you have somebody with a shop, right? And if they register, they don't put the invoice bill not going to show you 45 plus GCD, it's going to show $45. Cool. So the reason I did blue web was I was trying to mimic a small company. So a small company, them have them sales, but GCT in it, so you have to back it up to show that's another sales, right? So that was my intention. When I put the whole red and said, forget GCT, when we do the GCT, we do the GCT part, right? So normally, I shop, I don't shop now get an invoice, right? I got a shop, you go to one shop, then I get an invoice. Yeah, I'm going to get a total. Cool. So, but when they get the total, then still have to pay GCT. So what was working on was that when they realize that the sales is $1 million for the month, right? They need to know that they must tell the government say 1 million, they must pay 50% of the 1 million. They need to let the government know that the tax was in it already, like 1 million they collect in total. So they collect the GCT already. So that was the objective of the question, right? So the objective was that smart blue wave and little electronics company, right? But the other expense, like the purchase and stuff, you wouldn't know, can get bills for the purchases, light bill, have some money. So those ones, that's why I would say on those bills, these were the taxes on those bills, right? So that was the intention. But generally, when you are doing your working, let's say it's a formal company with invoices, the sales would be whatever. If the sales is 8 million, the output would be the 15% on the 8, assuming there's no exempt or zero. That's how we do that first, right? If there is exempt or zero rating, we back out those first, and then it will be the 15% on that amount, right? So it would be on the sales figure. So yeah, that whole 15 over 115 is when a little man don't have invoices, and that was the assumption since we started with small business. I think that's what I mentioned before. We started with the little man first, but we're assuming the little man have a business just no cents $1 million like 7, right? How we ever work out his GCT for him is to tell him, all right, $1 million you sell, all right, I'm more gonna file it to you, right? So the filing of the show says less than that, and the 15% will carry it up to the $1 million. So that was the objective of doing that revenue part. Any more questions? Yes. Yes. Correct. No, the GCT, yeah. But the expense was fine, and I remember all our expenses were okay. It was the revenue that had the challenge. So yeah, man, I want a good question. Yes. So she's right. So in real life, generally, people would not include the GCT. Well, small companies do. Small companies do. Yes. Yes. Yes, the small business. Yeah. Yes, that's why I didn't like that. Yes. So I know. Yes. Correct. Yeah. Apportionate to know how much is GCT, and also because they don't have no GCT account created, unless you had set up their accounts for them. Yes, then you would have set up a GCT control account for them. But if one was not set up, when they have whatever expenses they have, they're gonna put it straight to the expense as is. Yeah, that's what they would do. They would put it straight as is. So that was my objective. The question was trying to make it look like a little man business, how him accounts normally stay, and you have to fix it up. Correct. Yes, so there's a question, a hand is up. Yes, Anarita? The question gone, or are you?
Yes, I'm hearing you now. As it pertains to this, though, sir, in real life, we
Yes.
wouldn't be able to expense the GCT and at the same time be claiming for that GCT that was expensed. Wouldn't it have to be one or the other?
That is correct, and this is why my part A was independent
Of
of
the
the parts B and C. I was
Fine.
trying to make it independent. So that's why I put the whole ignore. But in real life, you can't ignore anything. You have to look at all the information.
All right, no problem.
Yeah. So that's what. So we'll have the clean accounts looking at, yes. But initially we were starting out that what kind of hurdles you would go up against if a man was starting business. What are the things to look out for, right? So you would have put the GTP there, you know, you have to back that out. If having sales figure, we have to tell him, no man, don't worry, this is not really the sales figure, because the tax rate already, back it out and show what the sales is. Yeah, man, but put in the right figure. You can't put in, that's why I'm saying that's why he can't put in the 1 million.
Question for clarity on what she just said.
That's what we're trying to work out, you know, how much you need to put in. Yes. Yeah. Yes, our question was there online. So our comment.
Yeah, I'm saying for clarity on what she just said, in real life, the GCT would not be in the sales figure.
Go again, in real life,
Yeah, the GCT would not be in the sales figure. In
no,
the trading.
again, it's whatever you put as sales. It has been. I have clients where they have businesses, they have wholesales. And in the wholesale, they don't charge, they don't have a GCT on their invoice. They just have a price. The condensed milk, $350. They have all of that sales. When they get the sales, I have to back out what the GTs are put. That's net sales pre-GCT so that it can work out what their tax is. I cannot pick up the sales that they have for the wholesale because, as I said, there's no separation. So we are speaking about small clients. Yes, of formal companies, their account is set up where the revenue, the sales goes to revenue, the GCT goes to GCT. But a barber shop, a wholesale, a restaurant, they don't have anything set up, but they know that today the sale was $50,000. That's what they know. They know that they sell $60,000 worth of food every day. But they don't know how much it should be GCT, but they should not declare $60,000 because within that 60 is the GCT collected already on the sales tax. If they declare, they'll be overpaying GCT. So that's what we're trying to make sure that is clear for small business. So I understand, we all know the big business with the fantastic accounts, but when you're doing account for small man, he give you some documents, his bank statements, etc. He doesn't have an account set up unless you set it up for him. So you set up an account for him, then that's fine, where he can run him invoices from QuickBooks, you can run him invoices from a point of sale where it's split, then that's okay. But that's the reason why we're doing it like this is to say when the small man normally gains sales, check it. The man have not split man. The small man, that is why I put as in sales. Right? So you have to tell him, no, that is not your sales. That's a total you collected, inclusive of the GCT output tax. So that's what we're trying to do. So not trying to confuse it, but in generally, for small people, they don't have it split like we have it officially in our trial balance. They don't have nothing in trial balance unless you are the one who set up their accounting system for them. They don't have a trial balance. They have the ins, the outs, and then you're going to have to assist them with the split. All right. So lots of reading material I gave you for GCT. You have deferred GCT. You have lots of reading material there. How you can file the GCT online, some images there. So you all have a good bit of handout for GCT. I hope once you go through those. Now, in the email I sent today, I believe I sent a 2022 trial balance as well. That's actually the other assignment. So it's the same company we did the 2021 trial balance for. Just do the income statement, the return, retain earnings. So I'm going to send you all the solutions tonight for the 2021. Do the income statement, do the retain earnings, and do the balance sheet. And please just assume everything done at the bottom of my income statement. Just for consistency's sake, right? So we know two of them look like balance sheet account, but at least we get the same answer, right? No, they don't have to know. Just see that's 22 independent. That's fine. Yeah, man. See that's 2022 independent. That's fine. Income statement and balance sheet. So it can be similar to an income statement, balance sheet, and probably a little retain earnings calculation. So you'll see, I'm going to send you what was submitted. Don't have to do it exactly like that, but it can give you an idea. That will be your assignment. In our next class, we're going to do capital allowance. We're going to start dealing again tax filing. So we have some cases to look at. So hopefully you got a little exposure to GCT. GCT is a lot of notes y'all have. So y'all can follow up with those notes. But then we're going to move on to capital allowances and the other taxes. The GCT is actually a bonus for our sessions. I thought that would have been something good to add. If you notice on the outline, it's not on it. So now we're going to be covering everything else that's on the outline. So that's pretty much it for our session, everybody. So until Monday, so please do your assignment.
But sir,
I will send you the model answer, yes?
Sir, we don't finish the balance sheet.
No, that was to do the balance sheet.
Yeah, man, all of balance sheet are going to be the same. Remember, some of us do the GCT differently. There's one thing in the balance sheet that will be off. And I'm sending it to you, and I'm sending you all the solution to the assignment and the case. Right?
Eh,
So,
Thank
because I
you.
was just focused mainly on income statement and the GCT, but you can look and see the balance sheet.
But
matches
sir,
up.
let me ask a
Okay.
question. Your balance sheet balance?
I think so.
well,
Mine is not.
the balance sheet is out. Well, the GCT is out, and the difference between what we have and the
Uh-huh.
assets and it's 1,390,000. And I want to know how we get that for the GCT.
And my GCT is what, 390?
The
290
Alright.
something
I
is
know.
your GCT.
294. You have 294 plus we'll add the 95, but that not come into that.
That I get 390. Also, it got out by 1 million exact. All right, no worries. I'm gonna look on it before I send it to you and just make sure say good to go. So I look on that balance sheet part before I send it off to you all and make sure it's good to go. So I'll send you all the 2021 assignment and I will send you this case as well. Your assignment is a 2022 TB.
Yeah.
Whatever you see in the TB. I should roll up. Whatever roll up in the TB.
Assignment from Monday is what?
Go again.
What you say the assignment is?
The 2022 trial balance. There's an Excel in there. There's a trial balance 2022. That's the name of it.
Okay, okay.
No, do not roll over, man. Just treat it independently. Treat it independently. No roll over. All right. So that's it, everybody. Take care until.